All right, good evening, everyone. It is September 18th, 2024. I'm coming live at 8:17 on the West Coast. I appreciate you guys for staying up late with me. Or if you guys are watching this after you wake up tomorrow, I appreciate you for tuning in here with us as we break down and decode the Fed decision. Probably the most anticipated, and I think it definitely was the most anticipated Fed interest rate cut yet, right? With the consensus and understanding that we knew we were going to get a cut. Was it going to be a 25, 50, or a 75 basis point cut? That was the question. We got our answer. It was a 50 basis point cut. And in today's update, I want to break down what this means for the traditional markets, what this means for real estate, what this means for crypto. And I jokingly say decode because I talk about decoding the economic data, having to actually read through the details. Where are they coming up with these numbers? Of course, they're lying about half of it. Of course, they're manipulating as much as they can. And so we have to decode it. We have to read the cipher of the economic data, of the Fed speak, of Jerome Powell speaking, and him and Han and doing his dance up there on the podium today, giving his speech after the decision had been made. And I want to talk about what this means. And I'll just get right to it, folks. This is not good. For anybody that thinks that a 50 basis point cut is good, you can look back at history, you can look at the economic data before us, you can see how much of it lines up, and you can see what happens next time after time again when we start an interest rate cut cycle with a 50 basis point cut. Historically, what happens, which it's just not pretty. Now, I've been saying, if you look at the great financial crisis, if you look at the dot-com bubble, if they had a baby, if they made some love, their offspring would be, what we have here today is what would be produced, the current market that we find ourselves in. Now, is it just real estate? No. Is it just the Japan carry trade unwinding? No. These are the tip of an iceberg that's the global margin call, right? Is this time different? Yes, it's worse. And so I've been bringing this back to when you look across the board at all of the economic data, we look at mortgage rate demand going back to 1994. We look at the pace at which countries around the world are dropping our bonds. You got to go back to the great financial crisis. I just heard a Citibank analysis on CNBC today cite that we're at the worst hiring rates that we've seen in the last 10 years. So the amount of folks that are hiring, the amount of companies that are hiring right now, we've dropped down to a level that we haven't seen in 10 years. So that data point doesn't take us back to the great financial crisis, but nearly all of the rest of our data points do. When you look at the real estate demand, the mortgage demand, existing home sales, the level of inventory spiking right there, that's already started to flip. And essentially what's already happened is that the Fed has already rug pulled our economy, and it's too late. And the 50 basis point cut acknowledges just how bad it is. Now, I was in the 25 basis point camp. I was wrong. So you can slap an egg on my face for being wrong about that prediction. But the reason is I was giving the Fed credit that they were going to try to cover this thing up a little bit better because it's bad. It's terrible out there. And I didn't think that they would do a full 50 basis because that would be the acknowledgement, right? The 75 basis point from Elizabeth Warren, pleading for the banksters to cut by 75 basis points. That's absolutely ridiculous. And would really, we would have gone into a nosedive on the markets, I think, today. That would have really been a shock. The 50 basis point wasn't so much as a shock, but it was an acknowledgement from, folks like myself that are looking at this thing like, wow, okay, the Fed's really willing to go there. They're really willing to have that conversation. See, and of course they put their spin on it, right? With Jerome Powell giving his statements after. And the main reasons that they cite this is because they see that unemployment's getting bad. They see the trend there is not good, and they are trying to act like they've won the fight against inflation. Now, of course, cutting interest rates, easing up on debt, easing up on credit, this is inflationary, right? And so it's going to lead to inflation coming back, but for the time being, and if you look at this last reading that came in, it came down at 2.5%. Of course, it's a CPI lie. Of course, it's manipulated. But the point being is that the Fed gets to declare victory, but then they get to look over at the jobs market and say, it had to be this way, guys. I'm sorry. Yes, of course, they miscalculated on 800,000 jobs. And what folks are forgetting and missing on that point is that that's an economic data point that took us from the spring of 2023 till the spring of 2024. That was the time period where we lied about 818,000 jobs. What the heck do you think that they've been doing since then, leading up into an election? You think that they've been fudging those numbers on the jobs just a little bit? Now, of course, it's just part of their process, right? The second and a third revision. But once again, the Fed gets to claim victory on inflation, but then they get a look over at the jobs market. They see that the hiring levels are levels that we haven't seen in 10 years. They're seeing that, what little folks have made in wage gain and wage inflation is getting eaten up by every other cost, right? Your 2 and 3% raise that you got at your job last year, what is that doing for you, right? And so the problem being is that our economy is breaking, and the Fed is acknowledging that with the 50 basis point cut. Now, of course, what's this market doing? What is the mass media doing? What is the group consensus doing? The same group of investors that thought that we were going to have 6 rate cuts last year. Was it 7 or 6 last year? And then they thought we were going to have another 6 this year. This is the same market. This is who we're talking about. This groupthink consensus mass media market. Well, they're all in the same stocks. The level or the lack of breadth that we have in our stock market, all of the concentration in the Magnificent Seven and a handful of other stocks leads to an environment where everybody's in the same spot. Everybody's in the same investments, right? And so everybody has the same thinking. And the thinking is that this is going to save the day. Oh boy, it got bad. The jobs market's breaking, the economy's breaking, but at least our stocks are up. At least our Bitcoin's hanging in there, right? And I'm going to talk about crypto later. And please understand too, guys, this gets so bullish. I am still so bullish, just not in the near term. And so I'm going to break down my timeline and what's going to happen here in the markets. But we will break. We are about to break. When you go back and you see here, September 18th, 2007, you go back, the same exact day, September 18th, and they start with a 50 basis point cut. What happens next? The S&P 500 rallies for a couple weeks, and then it proceeds to drop by 57% over the next year. So at that time, we had the same things that were being said. Oh, the Fed's coming in to save the day. This is about to get under control. The realtors and the mortgage brokers, the same mortgage brokers that are emailing me today, telling me that now's the time to buy, now's the time to come on in because interest rates have come down. Now the Fed has lowered rates. And although it doesn't impact the 30-year mortgage directly, this is going to be favorable for buying conditions, which is true and is a good thing that they reached out to me because I'm in business. I am going to be looking to buy because I know that real estate lags. Now, was the time to buy the time right around the first rate cut in 2007? No, that was the peak. That was when it had started to roll over. And real estate lags. Equity market and stock market lags as well. Crypto reacts first, and that's why we watch it. Because it reacts first, it trades 24/7, and because we think that it has the most upside potential on the other side of this thing. So let me put this very simple for you guys. If you guys want to just stick around here with me, I'm going to break this whole situation down. But what happens next, in my opinion, I'll give you the quick answer. Short term, we might see a little bit more of a rally, which is what we did today. We went and set a new all-time high for the Dow Jones, S&P 500, but the 3 major indices, Dow Jones, NASDAQ, and the S&P, all finished the day red. So we set a new high on today's date, and then we've come back down. So I believe that, we're probably going to be coming back down here shortly, even though we might get one last pump, one last breath of air before we're going down, which is exactly what happened in 2007. Market pumped for another 2 weeks, set an all-time high, rolled over, and it was a 57% correction for the S&P 500. So I'm going to explain here, but I want you guys to be ready because our time to buy, the final moments to buy here, I think are going to be coming up here shortly. And the correction I anticipate will be similar to what we had in 2020, kind of a V-shaped recovery. So let's break this situation down. Where are we at right now in the markets? 62,000 for Bitcoin. Bitcoin is trading up after hours, still moving back up, had a strong day today, got a green candle on the daily, 2,400 for Ethereum and 58.5 cent XRP. So those are hanging in there. We're going to slide on over to the stock market. I'm going to show you what I'm talking about. The triple top formation for the Dow Jones is in. New all-time high is in here at 42,000 for your Dow Jones. So we peak out. We set a new all-time high on today's date, which it does happen to be a lunar eclipse today as well. Yesterday was the full harvest moon, and I jokingly said in the update yesterday that you might want to harvest some profits because I think we're about to top out and roll over. And so I hope that you took advantage of that red candle on the day, even though we did go set a new all-time high. NASDAQ 100, we did go push back up, not to a new all-time high, but we did finish the day red. S&P 500, we did achieve a new all-time high, basically 5,690, 5,689, 5,689, right around there for the S&P 500. And then we finished the day red. Now, I want to slide on over to the DXY. Big volatility today. So your red candle right here is the Wednesday we traded here. Since I'm doing this update so late, it's nearly 8:30 on the West Coast, 11:30 Eastern. You're looking at the Thursday, September 19th candle right here. This is the Wednesday Fed day, decision day. And so what we see here is that we, basically dropped all the way back down here to basically 100.236. And then we've bounced back up here. But you can see the weakness in the dollar did show up today, which, as it's been correlated, an inverse correlation, I should say, Bitcoin was back up today, gold was back up today, and the stock market also topped out today. Let me show you gold real quick here. So gold went and set a new all-time high as well, and it's also back down, officially breaking well above 2,600. The futures market was even more, but I'm tracking it right here at 2,600 on my chart. And then it did finish the day back down red as well, just like the stocks. Now, what we're going to have to look at right here is the summary of Fed Chair Jerome Powell's statement. First off, they believe that the economy is strong overall. Sure. They believe that, and they have growing confidence that strength in labor market can be maintained. Okay, well, actually, when we dig a little bit deeper, you guys see we've been talking about it. They've been lying about it. So I don't know what strength in the labor market he's necessarily talking about. But sure, they have growing confidence that we're going to achieve some more strength in the labor market. Consumer spending has remained resilient. Yes, it took taking credit cards to all-time highs for us to achieve a resilient consumer, right? While interest rates are at the highest levels ever, Americans have racked up more credit card debt than they ever have. And this is what it took for a consumer to remain resilient, along with a stock market that kept propped up, which also helped, basically helped maintain consumer spending. When your stock portfolio is up, when your 401k is still up, when real estate market has still been, held up on paper, when you look at your Zestimate, which is much different from when you actually go to sell your property, the consumer can remain resilient because their 401k looks good, their Zestimate looks good. Everything looks good, and then they had room to run up the credit cards to a new all-time high. Inflation has eased but remains above the 2% target, and this is the big lie that they're touting that they defeated inflation, that they've won the fight against inflation. Although they acknowledge that it's still above 2%, what they're not acknowledging is that it's going to come roaring back. We're going to see another wave of inflation. The labor market is now less tight than before the pandemic. Fed is moving to a neutral stance, but not on any preset course. So they're going to stay fluid. But I think that, to take it to neutral, we're talking about going down to 4% over the next year, which, long term is going to be good, is going to be, for risk on assets and for those that want to see growth, those that want to take out debt. It's going to encourage, America to come back eventually. The problem being is that in the meantime, we will break. In the meantime, it already is breaking, and that is an acknowledgement from the Fed with the decision today. As the Kobesi letter summarizes Jerome Powell's statements, he asked the question, why is a 50 basis point rate cut needed if the economy is strong? And that's perfectly said, because it's not strong. It's actually really weak. It's been covered up. On paper, it looks good. On your Zestimate, it looks good. Try to go actually sell your property. On paper, our stock market looks bigger than ever before. The market cap is tremendous. It all looks fantastic. Everybody tried to go sell and see what happens. And these things have a way of compounding, right? Once the fear sets in, and I didn't think that the Fed was going to go with a 50 basis point because I didn't think that they wanted to shock markets. But they started to lead in the last week. They really started to lead up in this last week, preparing everybody psychologically, putting out little, basically whispers to Nick T and others, basically from the Wall Street Journal. Basically, they whisper into the ears of these journalists who can then, yell it out to the markets. Hey, a 50 basis point cut might be coming. There's a good chance it might be. And so that's why the betting market went from like a 3% chance of a 50 basis point cut to over 50%. And sure enough, that's what comes through. But why would a 50 basis point cut be necessary if the economy is so strong? And if we're seeing, and it's not, we know it's not, because we're seeing numbers like this. The current savings rate for U.S. adults is below levels seen in any other rate cut cycle in history. The current savings rate of 2.9% less than 1/3 of the historical average of 8.9% seen in previous rate cut cycles, according to Reventure. So I started out this episode by talking about how all the data point takes us back to the Great Financial Crisis, worst hiring numbers in 10 years, takes us back to the dot-com bubble, takes us back to the 87 Black Monday crash. And we look at this data point, the current savings rate. Well, it's the worst in history. When we're starting a rate cut cycle, this is the worst savings rate for U.S. adults in history. This is worse than the Great Financial Crisis. This is worse than the dot-com bubble. This is worse than the Great Depression. The current savings rate is only at 2.9%. And if another wave of inflation is going to be coming back, how are we going to achieve any savings? Furthermore, we have not had a Fed rate cut cycle without a recession since 1998. In fact, 10 of the last 14 rate cut cycles have resulted in a recession, according to Reventure. Well, that's not exactly how I would word that. I would say that what was taking place in the markets and in this time around by the Fed raising rates at such a fast pace, that's what caused the recession. The rate cuts is what popped the bubble that actually sent us into acknowledging that we were in a recession, right? So the rate cuts don't cause a recession. That's already underway. Our economy is already fading because of the Fed raising rates. The rate cut just acknowledges where we're at. Meanwhile, U.S. debt to GDP stands at 123.2%, nearly 2.5 times the historical average during rate cut cycles. Is this really a soft landing? Letter asking some great questions today, and we have the answer. It is not a soft landing, and it is not a strong economy. Otherwise, it wouldn't be a 50 basis point cut. Now, the last two times that the Fed's first cut was 50 basis points was in January of 2001 and September 18th of 2007. So dot-com bubble, Great Financial Crisis, they make love, they have a baby, make a little love, get down tonight. Well, what's about to go down is going to be your stock market. S&P 500 fell 39% over the next 448 days in 2001. Unemployment rose another 2.1%. Recession was achieved. In 2007, the S&P 500 fell 54% the next 372 days. When I measured it, it was 57% over the next 360 days, but who's counting? Give or take, it's good enough for government statistics. S&P 500 fell 54% over the next year. Unemployment rose another 5.3%. We achieved a recession in the Great Financial Crisis. This time around, we're doing the same exact thing. Now, I want to give you more data points. You can look back and you can see that, yes, we did get good stock market returns, 98, 95, 89, 87. Situation wasn't that bad. Wasn't nearly as bad as it was back in the dot-com bubble and during the Great Financial Crisis, and it definitely wasn't as bad as it is now. Now, the one caveat, look at the last three rate-cutting cycles. 2019 gives us a good glimpse, I think, of what's coming. In 2019, they started to raise the rates. It didn't take much, and it started to break the back end of the liquidity for the banks in the financial system. That's what led us into March of 2020 when we had one of the greatest collapses and crashes since 87. And so, although you got positive returns after 2019 and let me make sure you guys can see this chart. Sorry, let me scroll down there. There you go. You can see here in 2019, you got positive returns. The last rate cutting cycle, we got positive returns. Why was that? Well, because they came in with an unprecedented amount of money printing and stimulus. Over $6 trillion was added to our deficit and debt. $6 trillion was basically printed out of thin air. And they actually created over 1/3 of US dollars in circulation existence were created after 2020 in the following few years. And what we had was a government, our economy was shut down and then it was opened back up. So it was a violent V-shaped recovery. Now, this is what I think is going to happen this time around, is something similar. Although I've been saying the data takes us back to the great financial crisis, takes us back to the dot-com bubble. I make my jokes. I think I'm funny. Okay, that's great. But what actually happens? Listen closely. I think that we get another V-shaped recovery because they're not going to let this thing fall apart on their watch. They're going to come back in. They're going to try to save the day. They're going to turn back on that money printer. They're going to drop the rates back down to about a 4% Fed fund rate, 4%, which is in line with the historical average, right? Now, the problem that we face in our markets and for small businesses is that for those of us that want to go get debt, for those of us that want to go buy a house, when you could get a mortgage at 3% over the past few years, and now we go to 6% mortgages, although mortgages have come down from about almost 8% down to 6.25%, and they'll probably come down to about 6%, you're still double where you were at with 3%. When it comes to taking out a small business loan, right, and you were able to get debt for your business at 5 or 6%, and now they want to get you at 10 and 12%, right? When your credit card was at 12%, and now it's at 24%. Do you see the problem here? Even with the Fed taking the rates back down to 4%, we're still well above where we were at, which was 0. Now, I won't rule out the potential that they could take us back to 0 because we know that there's plenty of black swan scenarios that could take us down to those levels. We know how fragile our markets and our financial system is. And so what I believe happens next, maybe one last gasp of air, but then we're about to see a correction. And I believe it's going to be a correction before the election. And the reason why I think it's coming is because the market has to hedge the volatility that's coming. And the market, don't come at me. I'm just the messenger. But the market and hedge fund billionaires are already hedging their bet for a Camelot win, for an unrealized capital gains introduction, for a raising of the corporate tax rate. Don't take it from me, take it from them. This is Elon Musk retweeting out, and I covered this. This is John Paulson. Billionaire hedge fund manager John Paulson announced that he would withdraw his investments from the market and move into cash and guess what? Gold if Kamala wins the presidential election. This isn't politics. This is how's the program going to work out? What should I do with my money? Don't come at me. You can take your comments to John Paulson, the billionaire hedge fund manager. He manages an estimated $9 billion across various sectors, and he voiced concerns about Kamala Harris' proposed economic policies, which include increasing the corporate tax rate, raising the capital gains tax, and introducing a 25% tax on unrealized gains for wealthy individuals. He warned these policies could lead to mass selling and market crashes, predicting a quick recession if enacted. Elon the Musk retweets, and he says Buffett is already preparing for this outcome as well. And they're not the only billionaires that are doing it. Now, not every billionaire wants to get vocal. Not every billionaire wants to throw their support behind Kamala or Trump. But what they will do is they will move their money. And that's what we're seeing. That's what we're watching in real time. Now, when it comes to, support, this one came out today, which was a shock to the political markets. Teamsters will not endorse for president after their member polling gave Donald Trump an overwhelming lead over Kamala Harris. Electronic member poll, Trump 59.6%, Harris 34%. The decision comes just 2 days after union leaders and members met privately with VP Harris, who was apparently unsuccessful in winning some of them over. This is the first time in about 3 decades that the Teamsters will not endorse a candidate. The first time in 3 decades. A blow to the Democratic Party, as reported by the Washington Post. The Teamsters have a strong presence in battleground states and can play an outsized role in election, Washington Post reports. And so there you have the video below. There is Teamsters President Sean O'Brien addressing this and acknowledging that they're not going to be endorsing anybody, which it's not a surprise that they're not endorsing Trump, but the big surprise is that they're not endorsing the Democratic candidate. First time that this hasn't happened in 30 years. And so now, of course, this is just one union, and that's what the White House press secretary, Pierre, whatever her name is, White House press secretary, said, oh, this is just one union, and President Biden still remains very popular among the unions, and Kamala also remains very popular amongst the unions. This is just one. Well, I'm going to hold my comments to myself. What I will say is that I observed a massive rally in New York tonight in Long Island for Trump, and he also had a rally over in Arizona, and I'm going to talk about that in a second. But what's interesting, back to the money, which is what I like to focus on. Left, right, up, down, they're not going to take it. They're not going to make it happen for you. Even Donald Trump, he's not going to make it happen for you. Now, are some of his policies going to be different from Kamala's policies? Absolutely, in a major way. And I think that they will have a positive impact on making money, saving money, paying less in taxes, less regulation, and more investments will flow into the United States of America. And an agenda of becoming the crypto leader of the world sounds pretty dang good to me as somebody who invests in the crypto space and believes that it is the future of finance. That's what I like to hear. And so when it comes to raising taxes, I don't like to hear that. And I don't think that that's a program that will work out, very simply put. Now, I don't have billions to move around like the billionaires. I'm moving my few bucks around, but the billionaires are starting to hedge. And I'm bringing this back to why I believe there's going to be a correction before the election is because, one, you got to hedge against the Kamala victory. And two, well, all of the economic data that I've talked about on a daily basis and I broke down earlier here tonight, it's just not good. Our economy's not good. It's breaking. And so folks are taking profit. I mean, look at all the insiders that we've been covering. The CEO of NVIDIA, Jeff Bezos, these guys are selling off billions, tens of billions of their stock shares in anticipation. Warren Buffett's been offloading Bank of America and a few of his other positions as well. These guys see what's happening and they're hedging their bets. Now, this is very interesting. What came out here tonight. Donald Trump put this out on Truth Social. Says, quote, wow, just out, the FBI caught Iran spying on my campaign and giving all of the information to Kamala Harris' campaign. Therefore, she and her campaign were illegally spying on me, to be known as the Iran case. And he's obviously making a play on Russia. Will Kamala resign in disgrace from politics? Will the communist left pick a new candidate to replace her? Now, this is what Trump put out here tonight, and it does appear that this is what happened. This is mainstream media that's reporting this here tonight. This is not just a report from Trump. This is mainstream media acknowledging that Iranian hackers apparently, got into Trump's campaign internal communications, and they've been leaking them to the Kamala campaign. Now, it's interesting because you combine that with the rumors. I'll just call it a rumor. We won't say that it's verified. The rumors, and apparently there was an ABC whistleblower that confirmed that they got the questions before the debate as well. And I will say that in my observation of the debate that it was rather interesting how Kamala had data points memorized and ready to go for nearly every question. And I was very impressed. Her performance in the debate did surprise me. It was very, very good compared to what I thought it was going to be. And I found it very odd that someone who seems to struggle through many of her public appearances and speeches and can't do an interview that's longer than 19 minutes was able to cite such specific data points throughout the entire debate. I'm sure it was just a coincidence, and maybe that was just a rumor, but the rumor on the street is that the ABC whistleblower confirmed that, and reporting from mainstream media here tonight is that we got a little bit more dealings going on. Very interesting. And then we're not done. Guys, by the way, I'm sorry. I know some of you guys don't care to hear about the election. Some of you guys aren't in the United States of America. We got to watch this because it impacts our money. It impacts our investments. And it's going to, once again, this is a battle versus good versus evil, in my opinion. And when you understand that, when you understand the enemy, this is an enemy that's not just your regular, they're on the Democrat side or they're on the Republican side. Our enemy actually puts a D and an R in front of their name. You really have to understand that. Many people get it twisted. And for anybody that wants to say that I'm just a Trumper and a big mega guy, go look at what my response was. Go look at when I lit up X the other night with Trump doing the DeFi crypto space. I have openly called out whoever's running the crypto campaign for Trump, I think should be fired. I think that that was a joke what they did the other night. So don't for one second think that I just sit around here worshiping Trump. I criticize Trump. When it's time to criticize Trump, I will. And on the crypto Twitter space, I thought it was a joke. I thought it was an absolute joke. And I shared that in my update yesterday, and I also was tweeting about it on X real time. Now, net, it was bullish for the space because Trump's bringing more attention to crypto. He showed up and he paid his bar tab in Bitcoin, which that's the most fake thing ever because Trump doesn't even drink. So maybe he did buy some drinks for somebody else, or maybe he had to pay for his Diet Coke because that's all that Trump drinks. He doesn't drink alcohol. But he paid his bar tab with Bitcoin. Took quite a bit of time for the transaction to actually go through and be verified. But I think that they sent it over the centralized Bitcoin Lightning Network. But, once again, I'm just here to report on this situation and to help us understand how this is going to impact the economy, our finances, and our investments. Because no matter who gets elected, we have to understand that. And then we have to be able to take action based off of our thesis after we collect all this data, decode all of it, and then, hedge our bets on who's going to get elected, selected, or whatever the heck's going to happen this election cycle. And I wish that it wasn't like this election cycle, but this is where we're at. And what am I talking about, folks? This is still unconfirmed. And, I had somebody rip me in the comments the other night on the Trump shooter. And when I posted an update talking about the Trump shooter, at his golf course there in Florida, I literally dropped my update talking about him. And then 30 minutes later, the FBI comes out with a report that shooter didn't actually send any shots. He didn't get off any shots. And then I got these people in the comments telling me, oh my God, just trying to rip me to shreds, trying to tell me that I'm sharing fake news. And it's like, okay, this is a breaking story. So I want to share this, caveat before I share this next point. Everybody put on your big girl and big boy pants and understand that some of these stories are developing. And I present the information as I get it. And yes, I do share my opinion. And yes, I do ask you, if you do disagree me, if you don't like what I'm saying, just please drop me a comment down below and please engage. That's all I ask for. Just please interact. Give me a thumbs down and tell me how much what I said is wrong. Please. But when it comes to these breaking news updates, things are developing. Things are happening in real time. And what we're reporting on here tonight is a mysterious illness striking the Trump rally in Tucson, Arizona. Approximately 20 attendees, including Latinos for Trump members, reported blurred vision, severe eye pain, and facial swelling after Trump's Tucson rally. Doctors diagnosed several with chemical burns, though the cause remains unknown. The Trump campaign is investigating the incident. Now, folks, like I said, I wish that this wasn't where we were at in our election cycle, but this is what we are covering. This is where we're at. And once again, this has to be accounted for and put into, as a variable into our equation, into our thesis. What do you need to hedge against? Why do we continue to stack? Why do I continue to stack utility with no counterparty risk? Because I don't know if we're about to break out into a civil war. We've already been a centimeter away from a black swan event and a market crash unlike we've ever seen before. If the first Trump assassination attempt had gone differently, right? So we have to understand, this is why we got to hedge. Now, obviously, one of the ways that we are hedging is with crypto, is with XRP, along with our precious metals, and along with our cash. And I wanted to share with you guys here tonight that we got some whales that are moving some XRP around. I don't know what this is about. A couple of days ago, it was reported that Chris Larson, well, of course, last week, it was reported that Chris Larson is endorsing Kamala Harris. He wasn't going to donate her any money that we know of, but he was giving her his support. And then we see him move 50 million XRP. I still don't know what that's about. I don't know. And I jokingly said, maybe it's a donation to Kamala. Maybe. Stuart Aderati did give XRP to Donald Trump. That we do know. Is Chris Larson going to put his XRP where his mouth is? We will see. But he did move 50 million XRP. And then today here, we see that we got more XRP on the move. 19 million XRP transferred from unknown wallet to Bitso. So someone loaded up on the exchange here. And then we also saw 100 million XRP transferred from an unknown wallet to another unknown wallet. So we got some big XRP whale movements happening here. Chris Larson moving 50 million XRP. What is going on? Now, and in my opinion, what's happening is that we have big whales that are loading up for this next bull run. The reason why we're starting to track some of these large whale movements, this isn't Ripple, or at least not that we know of, but these are just big whales in the community and, big players in the market that are moving XRP around in anticipation of the coming bull run. And I've been covering this in my last few episodes, and I'm, going to take a break from covering all the TA gurus and the Bitcoin bros that are now buying XRP. I can't believe I'm admitting this today, but for the first time in ever, I'm buying XRP, when really they've had their little moon bag of XRP forever, right? But they, make their platform about being, Bitcoin is the end all be all. So they can't talk about their little XRP moon bag, and then they put out a tweet, and then they put out a hype clickbait video. And they, like I said, they're hyping this thing up more so than I ever could, right? And so we're starting to see the whale movements. We're starting to see mainstream crypto get on the XRP train. It's all in anticipation of the coming bull run here for crypto, but primarily for XRP and those that are starting to see how XRP is ready to shine, right? The spotlight's going to shine on XRP after this SEC lawsuit gets put behind us. And guys, we are so close. We're only a few weeks away from that appeal window expiring, and then this case could potentially be over completely, right? October 6th is the deadline. We wait to see. If we don't get an appeal, this case is done. Case is settled, and we move on. And remember what Stuart Alderati, the chief legal officer of Ripple, said. Ripple's case is over. Right? So here we are. Ripple's case is over. Spotlight's about to shine. And then if you guys have been paying attention in the community, I know not everybody gets into the tech. What I do is on the Twitter spaces, I try to listen to the developers, even though sometimes it can be a painful listen, I will say. God bless the developers. I like them and respect them, but they're not as good at presenting and talking as, some may be. But nonetheless, I like to listen to these guys, even when they nerd out on the tech a little bit, so that I can understand the amendments and the utilities that are coming to the XRP ledger, and it's massive. And it's all happening in a completely decentralized way on the layer 1. Unlike with Ethereum and all these other blockchains where it's layer 2, centralized points, choke points, SEC suing AMM platforms like Uniswap. Meanwhile, our AMM is added directly to the layer 1. It's completely different from basically every other blockchain out there. When you look at on-chain lending, when you look at decentralized identity, when you look at permission dexes, when you look at oracles, everything that's coming to the XRP ledger, including the conversation that took place today with David Schwartz. David Schwartz hosted his first ever Twitter space, and he had a conversation with Mayuka, who is a senior software developer at Ripple, about bringing programmability smart contracts to the XRP ledger and why he was wrong, why Ripple was behind on bringing smart contracts to the XRP ledger, but they did so because they wanted to protect the XRP ledger and its main use case function, which still today is payments. And despite Ripple and David wanting to add smart contract programmability, the focus will still and will forever be payments first. But David has now shifted his opinion on smart contracts, essentially now thinking that you can add basically a light version of the smart contracts where you wouldn't cause congestion, bloat, and he cited how he was worried about that too much data would have to be stored if you had full-blown smart contracts. So that's why XRP's ready. We got whales moving. We got all of the Bitcoin bros. We got all of the mainstream crypto media coming in on XRP. And meanwhile, we compare this with what we are seeing right now with Vitalik Buterin taking the stage at Token 2049 in Singapore, singing a new song. That's right, folks. That's right. Some of us got memes, and the ETH community definitely has memes, including the founder of Ethereum, Vitalik, right? Being one of the biggest memes in the cryptocurrency space, and continuing in that he brings a new performance to Token 2049 in Singapore here today. Listen in on this classic, folks.
And its properties are far better than all the rest of them. It's mathematical. No more double spend, it's encryptable. Put your cash in your brain or it's wearable. A new form of wealth begins. And its properties are from.
You guys let me know which choice you're making. Okay? There's quite a difference, right? There's quite a difference from a little boy who shows up in sweatpants to the conference from when Ripple walks in the room. Now, once again, great success over on Ethereum, and we're about to pull some of the best parts of Ethereum over to the XRP ledger with bringing programmability, the EVM sidechain. We'll be able to bring over the smart contracts that worked on Ethereum. We'll be able to bring those over to the EVM sidechain or to the XRP ledger through programmability. Now, the programmability to the XRP ledger process is going to take a while. And by the way, I want to take Q&A now, guys. I appreciate everybody for stopping by here tonight. I do appreciate you guys for stopping by here. And we still got, I'm probably going to stay on for another 20 minutes or so. So let's do Q&A for the remaining 20 minutes of this session. Please drop your comments, questions down below. And if you guys haven't already, please make sure that you have liked this video, tap it, smack it, and help me out by sharing out the content far and wide. Let's do Q&A. And you guys, let me know what you think about Vitalik Buterin and his most recent karaoke performance in Singapore. It's funny because Scotty just said he was forced to do anything unless they blackmailed him with a video of him. Yeah. Well, here's what I was going to say. I was going to retweet this out and I was going to say, this is what you're forced to do. Well, I'm not even going to say it here. I forgot. I'm live on TikTok and we're live on YouTube. I don't want to say. I was going to say that this is what you got to do when you're a puppet of you know who, if you guys know who actually controls Vitalik. If you know who actually controls Vitalik, then you know where I was going to go with that. But I'm not going to say the name of that country and that group and that entity on the live here tonight. Ethan, I appreciate you with the 5 spot, my friend. I appreciate all the info and videos every day. Now, I hope that I was able to simplify kind of what I think comes for the markets next, right? Which is one last gas of air, a little bit more, probably already topped out, and a correction comes soon. Correction before the election. But then I do think that we get a V-shaped recovery, right? I think that the election's going to have a big impact, but even if Trump wins, the market will start to price in and the market will probably start to move back up. But that doesn't mean that the chaos isn't over. That doesn't mean that there's not still going to be problems that we face within our economy and our markets, right? And so that's why I remain hedged. I remain, not much has changed over here for me and my strategies other than I'm just remaining focused on stacking as much cash as possible in my businesses because I want to have the most amount of liquidity as we go into this correction. Not only do I plan on buying crypto, I'm looking at precious metals. And then as I mentioned earlier too, I'm also going to be moving on real estate. And then the other asset class that I'm going to be moving on is private equity, right? So I'm not going to be building a portfolio of traditional stocks that are already public. I will be building a portfolio of companies that are private, going to be going public, right? That's my plan with equity stocks. When it comes to real estate, I'm going to be buying going to buy a personal property, and then I'm going to be building out my real estate portfolio. When it comes to cryptocurrency, I've been preparing my XRP exit strategy along with the exit strategy for all my other cryptos as well, because I believe that we are set to pump into 2025 after we get through this turbulence. So nothing has changed on my thesis for 2025 being incredibly bullish. It's just that I think that we're about to break down in the meantime. I think that the Fed acknowledging how bad everything is was made very clear with a 50 basis point cut today. If it wasn't that bad, it would have been a 25 basis point. Remember, the Fed doesn't want to be late. They don't want it to seem like they missed, anything. Remember, it's the same thing as them saying that inflation is going to be transitory, right? And how'd that work out, right? Here we are, still well above inflation. How do I buy? I don't know what you're looking to buy, but if you're looking to buy cryptocurrency or precious metals, I have resources available at my website, zachrector.com. Exchanges, wallets to store your crypto, and then I also have affiliates for precious metals. And we got some people that'll take care of you. Zach, once again, great content. After looking at that clip, it looks like they're eating string beans over at Ether, Milton. That's a good point. I don't think that Vitalik's eating very well. Yeah, we need to fill that boy out a little bit, don't we? Oh, boy. No, I'm sure he's doing good. I'm sure Vitalik's doing really well. You know, I actually don't think that Vitalik's like some villain or some bad guy. I just think that he's a puppet. He's probably one of the smartest devs that we have in the space, right? He's an absolute genius. But he's absolutely a puppet of the VCs that got in on Ethereum from the very beginning. XRP potential 6 months out. I don't look at the next 2 months, 3 months, 6 months. What I look at is, as this cycle finishes out, how high can XRP extend? This cycle can go well into late 2025. In fact, the Bitcoin cycles, as they've traditionally traded, we actually, are set to be bottoming out. We've already had a few corrections as well, but we're set to be actually getting ready to actually start the next phase of the Bitcoin bull run, and then we will see the altcoins follow. Now, what's interesting about this time around is that with the legislation that gets passed, DeFi gets brought about in a way that's not just speculators, that's not just DeFi Ponzi to DeFi Ponzi. That's what really hyped us up this last bull run in 2021. I think that what's going to hype us up this time around is going to be the rules of the road that set things in motion for this to all be legit, for us to be able to see who's actually going to be doing things properly versus who's going to be closing their doors because they were nothing more than a fraud or a scam that, was able to thrive during this speculative environment. And this is why I say XRP is ready to shine. I think that XLM's uniquely positioned. I'm looking at other cryptocurrencies right now like Bitcoin Cash. I'm looking at Flare. I've explained those in my last couple Discord weekly calls about why I'm looking at those cryptocurrencies. I've been looking at SEI token, SEI. I know that SUI's been pumping, SUI. I haven't really looked at that coin other than I've seen it pumping. So there are a few other cryptocurrencies that I'm looking at right now to actually buy during this next correction that we get. I'm very happy with my XRP bag. Pretty happy with some of my other bags as well. And then for my exit strategy, well, it's linked up down below. If you guys want to check out my XRP exit strategy, you can watch the full session. It's about a 25-minute update that breaks down when, how much I'm selling, and why I'm selling. But when it comes to my other cryptos, I plan on pretty much offloading them 100%. I don't plan on holding any XLM after this bull run. Not that I won't eventually buy XLM back in. It's just I'm offloading all of this. All of these assets will be offloaded because the truth is that I don't use XLM. I don't use any of these other cryptos. For XRP, I've started to use it in the AMM, and I worry about being able to get it back. There's, I worry about a supply shock for XRP. And so I'm not going to be playing around with all of my XRP. I will still be holding on to some of it. Yeah, so Robinhood in Europe just listed XRP, and I think that they're set to bring XRP live in the United States here soon as well. HBAR is one that I haven't seen enough use of the token to get me excited. I've seen partnerships that are solid. I've seen a lot of governance council members that are pretty impressive. The problem is I want to see more use of the token by said partners. What could you see XRP correcting to, Zach, in the coming weeks? Well, we can look at the chart, Adam. That's a very good question. For XRP, the trend line's at about 42 to 45 cents is the range that I would expect for XRP. Here you go. Let me zoom out. See, we're running out of time here. This thing has to make a decision here. We're running out of time. This thing consolidates and comes to a breaking point by February of next year. We're getting very close here. We need a clean break above 62. And really, we need a clean break above 66 cents. And then on the downside, like I said, 42 to 45 cents could easily be achieved. Easily. If we really break. Now, Bitcoin is pumping after hours. I got these marks right here, vertical lines. This was the Fed decision day, lunar eclipse. And then I got 10-2. That is the solar eclipse, also the first day of the Jewish New Year, Rosh Hashanah. Interesting pattern there that we've been watching on that one. XRP, almost at 589. But yeah, if we do get that correction before the election like I anticipate, then we get back down into my region for XRP. Then the next region that I'm going to be buying XRP at, if we do get it, is 45 cents. Otherwise, I'm happy with my bags. If we get another 45 cent XRP, I'll probably have to take advantage of that. An update on the AMM. Yes, it's coming. Is it worth it yet? I will let you know. We just got an update from DexFi that's going to be providing real-time data, 7-day, 30-day, 90-day, and all-time returns on your AMM liquidity pool. So you'll be able to look at a liquidity pool. You'll be able to see the returns over the past 7, 30, 90 days, or whatever it is. You'll be able to see the all-time returns. And so the platforms are now finally providing that data, which is what I've been waiting for, so that I didn't have to manually try to figure out my profit and loss on the AMMs. So I'm looking forward to being able to provide that with you guys in my next AMM update, which will be dropping, what's today, Thursday? Probably going to get that out this weekend. And if you guys are looking to get into the Discord group, that's at zachrector.com, and we have our calls every Saturday. So if you want to get access to me, want to ask a question, want to be a part of our community, every Saturday we have our Discord weekly calls, and you get access to that by signing up through Patreon to get access to Discord. Ethan says, I believe Trump bought the bar burgers. That's what I figured, is that he bought everybody beverages, bought everybody burgers. That makes sense. Paid in Bitcoin. Hopefully he didn't have to pay too much. Be holding XRP. Ask Zach, what's your read on the metals now the interest rates just tanked? They seem to be holding up. Yeah, so gold and both silver came back down after setting, well, gold set a new all-time high today, just like the Dow Jones, just like the S&P 500. They all set new all-time highs, but then they finished the day red. And that's kind of what happened for gold, is that it went and set a new all-time high, but then it did come back down. And so I think that gold, still has a long ways to run. It's just that if we get that correction before the election like I'm talking about, I think that gold comes down in that moment. It's a brief pullback before it continues back to the upside, and I still see a lot of strength. I still see that gold has room to run towards 3,000. If not by the if not by the end of this year, by next year for sure. Dennis just dropped a super chat. Thank you, Dennis. Jazzy from Ripple DeFi Products and James Exceller disclosed Exceller will announce deals with JP Morgan and Deutsche Bank in November. Why is Jazzy their XRP Exceller deal? Yeah, so Piersys and Exceller are the ones working on the EVM sidechain, and the bridges to 55 different blockchains, because Acceler can connect us with not just the EVM, but can connect us with over 50 different blockchains. So that's going to be good. Look at that. Look at Freddie Riz in the house. Our good friend Fred, the lawyer. Many of you guys know Fred Rispoli. Is that the real Freddie Riz? Can the real Freddie Riz please stand up? Can the real Freddie Riz please sing me some karaoke? Take me back to the Cat's Meow, Las Vegas. What a time. What a time. What a group of people. Sometimes I worry not about the rate cuts, but that Zach is too good looking. It's not natural, man. Freddie, I appreciate you, my friend. Appreciate you so much. You distracted me, though, from the question. JP Morgan and Deutsche Bank, I have not seen that. Dennis, are you sure that that's not... you got to be careful, because these crypto news outlets are clickbaiting the heck out of us these days. They be stretching some of these announcements. But I will look into that. I will look into that for sure. Zach, what's up? I feel a move before end of year. What do you think, Rob? Yeah, I think that we break first before we move back up. I do believe that we break first. In 2007, we rallied for about 2-3 weeks after the first rate cut, and then the bottom fell out. Fred making me blush. Freddie versus Vitalik. There you go. I will tell you that Fred Rispoli is way better at karaoke than Vitalik. Way better. Not even close. Not even close. A few more minutes, folks. If you guys haven't already, please make sure you guys have liked this video. Please make sure you guys have subscribed and hit that notification bell. All of my community resources are available at ZachRector.com. And please, we got a few more minutes here. What else do you guys think? It happens every time rate cuts, then crash. Not every time, but the last few times, yeah. 2007, 2001, yes. ATMs are being removed in OZ at an alarming rate. Stu, yeah. What didn't they remove? Cash is no longer going to be accepted at Starbucks. And then cash is no longer going to be accepted at Walmart in Canada. So it is happening. Yep, it is happening. And that's fine. Don't accept my cash. That's fine. Every time somebody makes an announcement like that, I just stack more of this. Because if I really want the ability to transact freely, I just stack some of this. Utility with no counterparty risk and limited supply. Thank you very much. Yeah, so let's watch this market here the rest of the week. Let's take a look at what other economic data is coming out this week. So we did get housing starts were strong, building permits was strong. Yeah, a little bit of activity there. I probably can provide a real estate update at the end of this week after we get existing home sales tomorrow. We get initial jobless claims, Fed manufacturing survey, and existing home sales tomorrow. So I'm going to provide another real estate update later this week. Home builder confidence was also up yesterday as well. So yeah, we got a good week of data. Good week of data for real estate. So make sure you guys have subscribed, hit that notification bell. Linked up down below is my XRP exit strategy, links to our precious metals, links if you want to get on a one-on-one call with me. I will not give you financial advice, but if you want to talk about, if you want my opinion on your business, investments, life, whatever you want to talk about, we can chat it up. We can have ourselves a good time. So check it on out. All the links are down below, or just head on over to ZachRector.com. I appreciate you guys for stopping by here today. And I will have another update for you guys tomorrow morning. So make sure you guys stay tuned back for that one. I will see you guys in the next one. God bless you all.